Today, we're going to go over every single trading strategy and explain them in detail. Or at least that's what this video says here. Every trading strategy explained. Let's watch this together. I'm actually excited. I bet we can learn something together here.
Fibonacci retracements. It is a tool that displays horizontal lines based on the Fibonacci numbers. These lines can then be used as key support and resistance levels. To use the Fibonacci retracement tool, you first start by identifying a swing low and swing high on a chart. Then, drag the tool from the swing low to the swing high. Next, wait for the price to make a pullback to one of these levels, ideally the 0.382 Fibonacci level, because that's the most common level where price tends to reverse from. So if price touches that level, that could be a good buy entry. Keep in mind that price could also reverse from other Fibonacci levels. Combine it with other confirmation signals to get a better entry. Breakout patterns. It is when price makes a sudden and significant...
You know what? Crispy doesn't use Fibonacci. He uses outlier. Boom! Well said, Crispy. I like that. I like that a lot.
Significant movement towards one direction. This usually forms after the market.
So breakout patterns are really interesting. So this is what we talk about. Buy stocks as they're crashing up, not as they're crashing down. If I were to draw the 10, 20, 50 on this chart right here, you would see it kind of, in fact, let me try my best here. It's not going to be perfect, right? But it would look something like this, right? Where it's kind of futzing with it back and forth. And the 50 would be something like this, right? But this is real. Let me change this to red. This is real. This is what it's like when you have order blocks. And you have seen order blocks work. I know you've seen order blocks work. There's no denying that there are overhead sellers when this happens. But if you can overwhelm the sellers with buy orders, then it can go to the moon. I actually want to look at Tesla on this one, because I think I have a decent example here. I think it was right here that I was looking at. Because this level, this was when Elon bought $1 billion worth of stock. And you could see, like, it ate up, it chewed up, it went through all of these sell orders here and here. But then it struggled for a while to get through that next order block right there. And now it's pushing to new highs, right? You could imagine this is a breakout. So we'll see if it continues up higher. But this is real. This is real.
Market makes a consolidation period. For example, here we can see that the price is consolidating. Then, it suddenly moves sharply to the downside. This is called a breakout. To take advantage of this, traders can use specific patterns as a guide to identify breakouts before they happen. Most notable breakout patterns includes wedges, triangles, and the rectangle pattern. Reversal patterns. It is when price moves in the opposite direction of the current trend and...
Now this, you're not going to pick this. You are not going to pick this. I'm telling you right now. Doesn't matter how hard you try. You're going to try over and over and over and over and over. You will not pick the bottom candle. Sorry, not going to happen. But that's the dream that people want to sell you, right? Buy AMD as it's crashing down for months. Because the one time you buy it, by the way, I'm not just picking on AMD. I give no monkey donkeys about AMD the stock, but a lot of people do. AMD the stock was going in a horrible, no good, very bad downtrend for a long time. And I made videos over and over and over and over again. Receipts are on YouTube. When other YouTubers were saying, you got to buy the dip, you got to buy the dip, you got to buy the dip. How far down is the dip going? There is no good logical reason to buy this as it's crashing down, because you don't know where that dip is going to stop. Now, AMD did find its bottom and run. But if you bought it, hang on, I can do the shift click thing. Shift here, go all the way down. You could have lost 40% of your investment before it hit the bottom because you wanted to be the hero to get that bottom candle. It will not happen. Sorry, it's not going to happen. You will not catch that bottom candle and then be the hero that catches it all the way up. And you don't have to. Just use the trend template, the 10 over 20, price over 50. Let price confirm which direction it's going, and then ride that bad boy, right? Oh, but Chris, those YouTubers were obviously so smart because they told their followers to buy the dip, and then it worked. You're right. They were geniuses. But those geniuses lost, I'll do a shift click here, 40% of the value of their investment before it started to work. And if you had bought at that level, it would have taken you from December until June, so 7 months to get back to break even. Whereas if you follow the trend template, which I give you freely, no masterclass required, you would be up 30%, where this joker is just now getting back to break even. Buy stocks as they're crashing up, not as they're crashing down. This is an impossibility.
Forms a counter trend. Specific patterns could be identified in a chart which could help traders predict reversals before they happen. Most notable reversal patterns are double top and bottoms, triple top and bottoms, head and shoulders, cups and handles.
So I want to talk about patterns as well, because patterns are super subjective. I may see one pattern that looks completely obvious, and then you look at it and you're like, I don't see it at all, right? We could look at this and be like, oh, that is the most clear cup and handle pattern in the history of humankind. Then somebody else is going to look at this, they're going to be like, well, I don't know, I don't see that. I see a bull pennant, or oh, you know what? This makes sense. This is the cow milking pattern. I don't know, whatever you want to call it, right? Patterns are super subjective, whereas the moving averages, they're math based. There's no denying what they're doing. It's just price and time.
Elliott wave. It is a theory that suggests that market tends to move in a series of 5 waves before reversing and forming another set of waves in the opposite direction. By understanding the Elliott wave sequence, traders can predict where the price is heading by following the pattern. In a chart, we can label each point of the waves as 1, 2, 3, 4, 5, and ABC. Now, there are specific rules to ensure that a movement is considered as a valid Elliott wave. First, wave 2 cannot be longer than wave 1, and usually pulls.
So then we're adding Fibonacci's into this wave. Okay. I mean, listen, if this is how you trade, by all means, make your money.
Back to the 0.618 Fibonacci level. Second, wave 3 must be the longest wave amongst wave 1, 3, and 5. Third, wave 4 must remain above the peak of wave 1 and usually pulls back to the 0.382 Fibonacci level. So here's an example of the Elliott wave in action. In this chart, we can see that the price resembles a possible 1, 2, 3 Elliott wave. And so, based on the theory of wave 4, which is that price tends to pull back to the 0.382 Fibonacci level before continuing upwards, we can use this as a potential buy entry when price makes a pullback. Fair value gaps. A fair value gap occurs when a candle forms a significant gap due to an imbalance of buying or selling. To find a fair value gap, you first need to find a candle with a large body. Then, draw a rectangle at the gap. Place it between the previous candle's wick and the next candle's wick. This level now acts as a potential magnet, where price may revisit before continuing its movement. Candlestick patterns. It is a technique that traders use to analyze future price movements by looking at specific candlestick shapes. Notable candlestick patterns include engulfing patterns, which signal strong momentum towards the direction of the engulfing candle, hammer and shooting star patterns, which indicate.
Yeah, I use candlesticks. The only time I even look at a candle, and I do not make any trading based around it, are these type, right? I can definitely see why. Think about it this way, right? If this is a bullish candle, that means price went way down, but buyers overwhelmed them and pushed the price back up, actually ending higher than it did on the day, and vice versa. If this is a bearish candle, price went up, but the sellers came in and overwhelmed it, pushing price back down. But don't get it construed, right? It can happen, like here, AMD at the very top, and then it went down. But it can also happen all over the place, right? Let's see. Like right here, this candle, let me circle it for you, right? That candle, in theory, is a bullish candle. And it definitely went up the next day, but that didn't stop it in the midst of a downtrend, right? So I wouldn't rely on the shape of a candle, but it can tell a story. LC has one. Let's go look at LC. I own some LC. Let's go look at LC. I mean, LC's working on one right now. Who knows where it's going to end by the end of the day. So yeah, I mean, if that's your trading, by all means, go for it.
Indicates rejection as shown by the long wick on one side, doji patterns, which signals neutrality in the market. Fully replaces a traditional candlestick chart to a Heikin-Ashi chart. When applied, it tends to give less noise than a traditional candlestick. A green Heikin-Ashi candle signals that the price is on an uptrend, and a red Heikin-Ashi candle signals that the price is on a downtrend. The size of the candle's body also indicates how strong a trend is. The larger the candle, the stronger the trend. Keep in mind that the Heikin-Ashi only acts as an indicator. It does not display the real market price.
Exactly. You aren't seeing the real price.
Moon phases. It is a concept that utilizes moon cycles to time the market. Moon phase traders believe that moon cycles are correlated with human emotions and behavior, which could have an influence on the market. Specific moon phases are believed to be favorable towards a certain trend. A new moon means the market tends to be bullish, and a full moon means the market tends to
I can't believe this is real. This has got to be a joke. This has got to be a joke.
be bearish. Today, it is used mostly as a confirmation tool. Renko. It replaces a traditional candlestick chart to a Renko chart. So, unlike a traditional candlestick which forms a new candle based on a certain period of time, a Renko chart forms its block based on the change of price. For example, every 1% change in price, a Renko block appears. This means that each Renko block represents a 1% change in price. Of course, you can change the parameters of this through the indicator settings. Traders could utilize Renko charts to filter out noise and identify trends. A green Renko block signals an uptrend, and a red Renko block signals a downtrend. And keep in mind that Renko charts only acts as an indicator. It does not display the real market price. Harmonic patterns. These are advanced price patterns that follows a specific shape based on Fibonacci numbers. Traders can then use these specific shapes to predict future price movements. For example, a bullish bat pattern is formed when price makes a series of 4 movements that is shaped like the letter M. Each point can be labeled as X, A, B, C, and D, and each of these points.
This is the bullish Batman pattern. It exists. The bullish bat pattern exists. Hang on, we have to clip this for our memes. The bullish bat pattern. Come on, the bullish. Okay, one more time. We got this. The bullish bat pattern does exist. Hold tight. I have to drop this in the meme section in the Discord. Ah, the bat pattern. The bullish Batman pattern. Yes. To predict future prices. Exactly. Let's see. Let's go here. We have to drop this here. Okay, let's keep going.
Points has a specific guideline. For example, point X to point B needs to have a value between 0.382 and 0.5. Point A to C needs to have a value between 0.382.
That means if there's a bullish Batman pattern, there has to be a bearish Joker pattern, right? Forget math. We'll just use moon phases.
And 0.886. And the same thing works for the other points. Next, these specific guidelines can then be applied onto a real chart. So, if you see a price forming a series of 4 movements, you can apply the harmonic pattern tool to check if the price that formed matches a pattern's guideline. If it does, then you can take a position based on the pattern that formed. There are multiple harmonic patterns that exist. Most notable are butterfly, bat, crab.
Crab, bat, butterfly. Who's Gartley?
And each have their own unique values. Support and resistance. Key levels that formed horizontally where the price has bounced off in the past and could possibly bounce again in the future. If the level is below the price, it's called support, where you can take a buy position if the price approaches it, and if the level is above the price, it's called resistance.
Now, that you can do that, right? H-band's a perfect example. Every time it gets up to this area, you could initiate a short and watch it come down. That is a very risky strategy to me because you're counter trend trading at that point. Because we just showed a couple times where it can have enough buy orders to chew through those order blocks, to completely chew through them. I'm not going to get in the way of that. What I'm going to do is I'm going to ride the trend up, and then, like I did in H-band, I made a ton of money on H-band. Once it got up to this area, that was my exit signal. I got out.
Where you can take a sell position if the price approaches it. Dynamic support and resistance. Similar to support and resistance, dynamic support and resistance also acts as key levels. But
now you could do this on a trend line, right? You could do this on like a, in fact, H-band did it right here. So H-band's a great example of support and resistance at price levels, as well as support and resistance at moving averages. Look, the 10 EMA, every time it pulled back, it came back to the 10 EMA and it was great support. Same thing on the downside. It would pull back to the 10 EMA and that was great support. Okay. You could take trades like that. You could. I am definitely not advocating you to do that. Waiting for it to pull back, and once it touches it or something, you could use that as your entry. You come up with your own plan and write it. But this is a real thing too.
But instead of using static horizontal lines, it uses indicators like the moving average to act as our key level. Trend lines. Trend lines are key levels that form diagonal.
So I think trend lines that you draw are super subjective. I've seen plenty of YouTubers trying to explain how, if it touches it 3 times or whatever, then it's going to continue touching it forever. I don't know. It's not a, it's not one of those things where it's a guarantee. Plus it's also subjective, right? I could draw a trend. Hang on, I have to do one over here. I have to do 2 points. I have to do like here to here, right? And is that the right way to draw it? Sure. But then it crashed through it, right? Or what if I should have done it right here? Well, of course it's going to bounce right back up. Oh, wait. Yeah, I don't know. This is not for me.
Diagonally during a trending market. You can use trend lines to identify the overall direction of the price. Upwards trend line means bullish, downwards trend line means bearish. And similar to support and resistance, you can also use the trend line to identify possible entry scenarios. For example, if price retraces back to a trend line, it can be a good opportunity to take a buy position. Gann angles. It is a tool that displays multiple lines.
I have never seen one of these. Have y'all seen this before? Type the word Gann, G-A-N-N, in the chat if you have. I have not seen this before.
Lines that spread continuously on different angles. These lines can then act as possible key levels and could also help you measure the strength of a trend. Price moving within the steep angles of the tool indicates a strong trend, and price moving within the shallow angles of the tool indicates a weak trend. To apply the Gann angles, first you go to Settings, then make sure to check the lock price to bar ratio. Next, identify a market range and mark the swing low and the swing highs of that range. Then, draw a straight vertical line at the start of the range. After that, select the trend angle tool and measure 45 degrees. Then, use the Gann fan tool and place it at the 45-degree angle. Momentum indicators.
There you go. I don't know. I've never heard it before. Y'all have, so that's cool.
These are the types of indicator that measures the direction and strength of a trend.
This looks like a MACD. Now, a lot of people get excited and think MACD is like some sort of magical indicator. Honestly, it's not. It means moving average convergence divergence. MACD, moving average convergence divergence. All it's doing is measuring the width of how far apart these are. In fact, let's add it to my chart here so you can see it in real time. MACD. Moving average convergence divergence. Okay. We add it to the chart right here. And you can see, there we go. You can see down here, when the moving averages are splitting apart, it splits apart. And you'll also notice when it's above the 0 line, that means the 2 moving averages, which these are different moving averages than I have on my chart, but you'll notice they will cross down, and that is when it crosses under 0. Pretty interesting, right? It's not magic, but a lot of people look at something like MACD and they're like, oh my God, this is magical. It's literally just looking at the moving averages and then putting them around each other.
It's most effective when used in trending markets. Some of the most notable momentum indicators are MACD. An upwards crossover indicates a bullish trend, while a downwards crossover indicates a bearish trend. Moving averages. Price being above the moving average signals a bullish trend. And
now, when we talk about moving averages, also, they're not magical either. All they're doing is showing you price measured by time. And when I look at a chart like this, right, a lot of people want to look at charts and they're like, oh, this is so brilliant. I can't believe the chart right there. By the way, look at the support and tell me the order blocks don't work. Look at this. Look at boom, boom, boom. How interesting is that? Anyways, moving averages are just price and time work together. In my setup, I got the 10, 20, and 50 EMA. That's your short term, intermediate term, and longer term. Is it the longest term? No, of course not. It can be a lagging indicator if you want to call it that. But we're not trying to catch every top and bottom, right? We're trying to catch the 20% in the middle, right? So imagine that this is a brisket sandwich, right? Imagine this is a brisket sandwich. You're not trying to catch the bread on top or the bread on bottom. You're trying to get that juicy meat right in the middle. You can make so much money by eating that juicy meat right in the middle. This is exactly why you come to the brisket sandwich store to begin with, right? You don't come here for the bread. You can go to Walmart and get that bread, but you want that good brisket. That is what you're there for. You can make so much money on that.
and price being below signals a bearish trend. Parabolic SAR. A dot below the price indicates a bullish trend, and a dot above the price indicates a bearish trend. Super trend. Green signal indicates
Super trend. Hell yeah, we gotta have that. Wait. I gotta add that immediately. Super trend. Super trend. All right. Well, therefore, we just need this forever. Super trend. I don't know what it is, but it sounds really good, so we have to use it immediately. Let's go to let's go to SoFi. Let's go. Super trend. Oh, wait a minute. Which is more important here? The super trend or the order block? I would say the order block in this case, because it had like a 50-something% down move. This super trend's kind of baloney. I thought this was supposed to be the super trend.
it's a bullish trend, and the red signal indicates a bearish trend. Oscillators. These are the types of indicator that displays the relative strength.
Oh. Oh. Hang on.
Pro tip.
Damn it. I had that button the whole time and I didn't get to use it.
Of a price. It is most effective when used on choppy or sideways markets. Most notable oscillators include RSI. When the line is in the oversold region, it indicates a possible reversal to the upside. If it's in the overbought region, it indicates a possible reversal to the downside. Stochastic. If both lines are at oversold, it signals a possible reversal to the upside. And if both lines are at overbought, it signals a possible reversal to the downside. These two lines can also cross over each other to predict future price movements. Divergences. Divergences occur when an indicator displays an opposite signal of the real price movement.
Okay, so that is somewhat real. One thing that I've noticed, in fact, I have an outlier button. Let me click the outlier button. That'll be easier. Bam! Outlier button, straight onto outlier. One thing that I've noticed is over on market breadth, we have seen times on divergences. And I've mentioned this a couple times, and I'm still trying to figure out what does it mean. When the SPY greed value is higher than anything going on right here. Now, this is a bug. I know this is going to get fixed. Don't stress. But 1.01 means a heat map value of 51.01, 57.21, 55.32. I'm still trying to figure out what that means. When the fear and greed of the market is greater than any fear and greed of any one individual sector, it just something. There is something with that. I'm telling you, there's something with that, and we're going to come up with something at some point. No doubt about it.
When this happens, it is usually a sign that the trend might reverse. Divergences can occur in many indicators such as the MACD, stochastic, and the RSI. For example, here, using the MACD indicator, you can see that the price is forming higher highs, which is bullish, but the indicator shows the opposite, a lower highs, which is bearish. In this case, this is a bearish divergence, which signals that the price may form a reversal, and so you can take a sell position. Volume indicators. These are types of indicator that shows the strength behind a price movement by tracking the trading volume. Notable volume indicators include price volume, which displays the volume for each candle. The longer the bar, the higher the volume. Volume weighted average price, which shows the ratio.
All right, listen. I have a particular disfinity. I don't know if that's the right word. If there's affinity and disfinity, I have a very particular disfinity for VWAP, specifically anchored VWAP. Those who know. Cease and desist Chris talking right here.
Of an asset's price to its total volume. It can be traded like a moving average or as a dynamic support and resistance. Volume profiles. It displays a volume bar horizontally, which can be treated as key levels for potential entry position.
I actually think this is cool. I actually think this is really cool. Let's take off the super trend because it's hot baloney. Okay, we've taken off the super trend, but I do like the idea of volume profile. I don't know which one of these. I'll just click the top one there. Nope, that's not what I wanted. I don't know how to draw this in TradingView. TradingView gives you too many indicators, in my opinion. But however you draw this, I could do it really easily in TrendSpider. I don't know how to do it in TradingView. But I think this is actually really cool because it shows you where everybody's at. Also shows you gaps. Also shows you where there's nobody. And if there's nobody there, what do you think can happen? It can plow through those areas.
Supply and demand.
Oh, Carlitos. That's exactly what I was thinking. Exactly. How the volume profile lines up with order blocks. I think that would be really interesting as well.
Also referred to as order blocks, these are zones.
Oh, shit. He said order blocks. 10 out of 10 video for me. Oh, everybody say, boy, B-O-I-I-I in the chat. Order blocks, boy. That's so fun.
Where significant price movements have occurred. If price moves significantly upwards from a level, it is considered a demand zone. And if price moves significantly downwards from a level, it is considered a supply zone.
And they work. They work so well. But I don't fight them. I'll trade up into them and I'll get out of the way. I'm not taking a stand against them and I'm not trying to fight them. I am acknowledging that they're there and I'm not going to mess with it. Think of it like a fence, right? Or a wall. Yeah, let's think about it like that. Think of it like a wall. If you're driving your car, and Chris Chains only drives a Maybach, by the way. Let's say you're driving your Maybach at the wall. One of the two things is going to happen. Either you're going to crash into the wall and it's going to get totally destroyed, or you're going to go through it, but it's going to hurt. It's going to hurt really bad. And it's going to take up a lot of the order flow that's clicking and making the buy orders, but you're eventually going to get through it. I don't want to be driving at a wall. If I see the wall coming, I'm getting out. I'm getting out of the way because one of the two things is going to happen, and it may take a month before it chews through that order block and moves higher. In that month, I can make all kinds of other trades.
Just like support and resistance, these zones can be treated as key levels for potential entry positions. Market structure.
Brandon knows. Brandon has a Maybach. I know that.
Market structure is when trader analyzes the behavior, condition, and flow of the market. An uptrend structure is characterized by price forming higher highs and higher lows, while downtrend structure is characterized by price forming lower highs and lower lows. Breakout structure. It is when price breaks the previous price peak during a trend. For example, if the price forms a higher highs and higher lows, this break of the previous highs is called breakout structure.
You can also use what's called a Donchian channel. So Donchian channels are not new. Donchian channels have been around forever, ever. In fact, let's go modify these settings on here. Let's say that you are like 50 periods, okay? So what this does is it waits and it looks for the highest price over the last 50 periods. And then when it breaks, it moves it up higher. Pretty cool, right? Pretty cool. Now that doesn't mean it will continue on, but rather than trying to measure this yourself, it can be done. You just throw Donchian channels on there, boom, 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 you're good to go.
Change of character. It occurs when price breaks the previous structure during a trend, often signaling a reversal from that current trend. For example, if the price is forming higher highs and higher lows, then it breaks the previous lows forming lower lows. This is called a change of character. So, did I miss any strategy?
Okay, that was really interesting. That was a lot. Jin and Bukos has the exact right strategy that we've learned from all this. He's not a derpy joker. All right. He's not a derpy joker at all. He says his golden rule is to never buy real estate stocks during low tide when the moon is visible during the daytime. And if the chart looks like a moose, buy, baby. I love it. So listen, there's all kinds of different ways to trade the market. You don't have to do any of these, or you could do all of these, right? The idea here is to come up with what works for you. Once you find what works for you, just use that for the rest of your life. Once you have a actual mathematical proven edge, and a lot of people don't. A lot of people want to say, oh, this moon phase definitely works, right? Or these Heikin-Ashi candles, $75 in this one stock will turn into $1 million. That's not the reality of trading. The reality of trading is that it's meant to be really, really boring. If it's exciting, you're doing it wrong. Just a fact. But this afternoon in Outlier University, we are actually going to be listening to our students who have not presented their plans, present their plans today. Now, Outlier University is our way to make you successful in the stock market for absolutely free. Our evil plan is to make you successful, and then you'll grab Outlier because you'll see just how easy it is to use to help you save time, make money, and start winning with less risk. You can do that by starting to click one of these two videos. Have a fantastic day. We'll talk soon. All right. Very, very quickly, I don't see any reason to exit our trades today. We're definitely not going to put any on new trades today because the SPY is in a sell signal. That's it. I mean, like, that's a fund manager. That's all you have to do. So be sure you come back for this afternoon's Outlier University. We'll talk soon.